New traders often ask me about scalping. How should I trade? Most new traders start with scalping. It's intense. You need a lot of focus. It really feels like you're getting immersed in financial markets when you're scalping. I don't scalp, but it can be a good way to learn how to trade because it's so intense. If you're trading off a 10-minute chart, getting a new candle every 10 minutes, you're really watching how financial markets develop. The patterns, the candle formations, the trend lines, and the moving averages, they're all relevant whether you're looking at a 10-minute chart or a 4-hour chart or a weekly chart. So it's a really good way to immerse yourself in technical analysis, in seeing how financial markets move. And if you're scalping all day, you're sitting there for 6 hours, 8 hours, watching all the news flow coming in, you're seeing how the markets react. It's a really good introduction to financial markets. So yes, I do recommend it. I think it's a great idea. I think you need to be aware that if you're going to be a scalper, it's going to take its toll on you. Try doing that every day for 3 months. Eventually, you'll come to a stage where you just can't keep doing it. You could be doing dozens of trades a day, and it will be too much for you. So eventually, you'll need to step back from the market and start looking at a 1-hour chart or a 4-hour chart, and maybe only doing half a dozen trades a day instead of 50 trades. I've met people that can do 70, 80 trades a day. I think that's a bit much in the longer term. But as you're getting more experience, as you're learning to understand setups, to understand what works for you, whether you want to trade off trend lines or moving averages or Fibonacci or candle patterns or candle formations, whether you want to wait for confirmation before you enter a trade. There's so many different ways of trading, but eventually I think you'll find that you'll step back from the market. You'll look at longer term charts, an hour, 4-hour. You'll have time to plan your trade. It won't be so spontaneous. It won't be so intense. And you'll plan your trade and then you'll trade your plan as you go through the day. Maybe you'll be doing 5 or 6 trades a day instead of dozens. At this stage, you'll then start to develop a trading strategy where you have certain criteria that you use to identify trade opportunities that are low risk, with a stop loss, with a target. And then that will be something that you can actually measure over time. You can look back at the trades over a week, a month, a quarter, and say, right, how is this strategy developing? How can I optimize it? What do I need to do? Am I over trading? Am I not trading enough? Am I being too fearful? Am I doing quite well? Can I increase the amount of risk that I'm taking? These are the sort of things that you can start to work on then when you have a clear trading strategy with entry strategy, exit strategy, trade management, account management, and risk management. This is the stage that you want to get to when you move on from scalping. I hope that's been useful. If you've got any questions or comments on how you go about scalping, I'd love to hear them. And please don't forget to like, share, and subscribe.